Hello, everyone, and welcome to the 23rd edition of the Access Business webinar. We're very pleased to bring to you another impactful edition. Now, the Access Business webinar is an initiative brought to you by the Access SMEZone. My name is Chibueze Ewuze, and I'll be your host for today. Now, if you've been following the webinars from previous months, you know that we discuss topics that will positively impact your business through conversations with subject matter experts to help provide insights, projections, strategies, and solutions that would inform your decision-making process in your business. Now, if you're a first-time attendee, we want to specially welcome you, and we know that you would enjoy this session immensely. Now, the topic for today's edition is raising capital, debt, or equity. And we have two incredibly talented personalities to help us make sense of this topic. Before we proceed with the session, I would like to share the ground rules for this very, very intensive 1-hour session. Now, the first rule is that during the webinar, we encourage all attendees to use the Q&A chat box at the top right-hand corner of your screen to submit any questions, comments, or suggestions that you might have. Please, when you do so, kindly ensure that you include your name and designation after your comment, question, or feedback. For example, if your name is Emeka Adebayo Ahmed, please include your designation, which could be CEO, and the name of your organizations, which could be Emeka and Sons Nigeria Limited. Please note that all questions and feedback will be screened, and only appropriate ones as it relates to the subject matter will be read aloud. We will take as many questions as our time slot will allow, so please bear with us if your questions are not attended to. Thank you once again for joining us. Now I will proceed to introducing our panelists for today's discussion. We have two panelists, like I mentioned earlier. The very first one is Bumi Akinyemiju. Bumi is a serial entrepreneur, technology innovator, and investor. He's the CEO of Venture Garden Group, arguably one of the largest fintech investment companies in Africa. VGG is the parent company of Venture Garden Nigeria. Now, Bumi sits at the helm of leadership at VGG, which has dedicated its resources to transforming Africa through technology and has successfully led several impactful projects through strategic, public, and private sector partnerships in several sectors such as education and social investments. He is also the head Digital Economy Policy Commission at the Nigerian Economic Summit Group, where he's helping to shape the Nigerian tech landscape. In 2017, Bumi was nominated as one of the top 100 most influential people of African descent in business and entrepreneurship by the United Nations. VGG was also recognized by the British government for its contributions to transparency and good governance in Africa. In 2018, Bumi received the Trailblazer Award at the Nigerian American Multicultural Council. Thank you, Bumi, for joining us. I hope you can hear me.
Yes, I can. Thank you, Chibueze.
Wonderful. Our second panelist happens to be my colleague here at Access Bank. Her name is Ayodele Olojede. She is the group head, emerging businesses at Access Bank PLC, where she's responsible for the strategy formulation to deliver the bottom line factor of the division. Ayo has over 18 years operational banking experience in Africa and North America at Skybank, now Polaris, and HSBC, prior to joining Access Bank. She's very passionate about sustainable growth of SMEs and possesses strong knowledge and hands-on experience of best practices in SME banking and risk management, to grow financial access for SMEs and women-led businesses. Her work has achieved recognition for best-in-class SME-specific credit assessment methodology for both locally and internationally to expand lending to new-to-borrowing SMEs. She's a university scholar, a fellow chartered accountant, and holds an MBA degree from Kellogg School of Management, Eversting. She speaks globally on SME finance and business services. Thank you, Ayo, for joining us on this session. It's a pleasure to have you.
Thank you very much, Chibeze. I'm very excited. Thank you.
All right. So to all our attendees, just want to remind us that, this is a 1 hour session. So we'll try and make it, as impactful as possible. Now I'll just go right into the questions, starting with Bumi. So Bumi, tell us, what is equity as a source of capital?
Yeah, thank you very much, Chibueze, for that. I think many times, especially in Africa, where we think a lot about, the identity of our business being just us. So the concept of giving away part of your company, which is what equity is, right, is a bit foreign. And people are like, no, I don't want to let anybody in. So for me, equity is essentially one of the instruments that you can use to raise capital. And in fact, so many times it is actually the best source for you to raise capital. And I'm sure there'll be more questions around that. So for me, and I'm always going to use personal examples, right? When I started my first company, and at that time, I couldn't qualify for for debt. If I go to a bank and say, hey, I want to raise money, they're just going to laugh me off, right? But then I could go to my friends and family and tell them that, hey, do you want a part of my company, 5% of my company, 10% of my company? Give me this capital and you can be sure that you will get returns. In that case, my friends and family, they don't need to get my 5-year history of financials, right? The 5-year history of financial they have on me is just knowing me as a family member. So at that stage of the business, the types of people that will take risk on you might be people that know you already. And in that case, all you have at that point is your idea and you're giving a share of your company. So I don't know if that is helpful in just sort of keeping it super simple, that equity is issuing shares in your company, and this might be the most appropriate at times where you may not necessarily qualify for a bank debt, or that is not even the right structure for you.
Okay, so you mentioned that this concept is kind of foreign. I want you to just kind of speak on that a bit. There's this mindset that, when you set up a business in Nigeria and possibly Africa, there's this mindset that, I want to own 100% of it. I want to be in charge. Nobody needs to tell me what to do. Why do you think that is? And, why is it that this concept of equity as source of capital is still foreign to us?
Yeah, thank you, Chibueze, for that question. Very, very brilliant question. And I'm sure that probably 50%, 70% of the audience probably run into this all the time, right? And I think part of it is trust sometimes, I don't want to bring people into my world, into the details. I want to keep them out, right? And, but in reality, let me back up a bit. Every business is in stages, maybe 4 stages, where you have kind of like the idea stage, right? Like the seed idea stage, you have the startup stage, then you kind of have your growth stage, and then you have your mature stage. So depending on where you are, which could be a function of revenue, there is what is ideal for you. I personally believe that when you're in that idea stage, you need equity, right? And instead of feeling like you need to hold on to everything 100%, you have to remember that 100% of a small number, 100% of 100 naira, is 100 naira. But if you grow that 100 naira to 100,000 naira, right? At that point, even 50% of a 100,000 naira is way more than 100% of, So I think growing the pie is to live with the audience. Always think about growing the pie instead of thinking about the slice of the pie. But you must be careful, right? The types of people that you're bringing into, equity, because they become a shareholder, they become a partner, right? They become part of the family. There must be alignment of vision. But once you have alignment of vision, I would say do it.
Okay, I liked the last analogy that you used at the end, which is, owning 100% of 100 naira of course, is not as interesting as owning 50% of the 100,000. Because I like to use that analogy a lot when I explain something like this to people. And now let's move to Ayo very briefly. Ayo, what is debt as a source of capital? Now we kind of have an idea what equity is. Just let us in on the debt side of the conversation.
All right, thank you very much, Chibeze. So debt as a source of capital means that at what point in your business is debt good for you? When Bumi was, sharing his perspective, he talked about the various stages of business and the type of funding that he believes would be suitable. So debt at some point in your business, which will be required, means that you're borrowing money that will be repaid back at some point in time, plus interest. Debt is required. Funding generally, whether it's equity or whether it's debt, is required to be able to scale up business. And as your business grows, you can't scale with funds from just your pocket. Even when Bumi was saying that at the time that he started, he needed to speak to his family and friends. But as the business grows, he cannot continue to fund his business from his pocket, whether it's for him to buy additional raw materials, whether it's to hire new employees, whether it's to buy new equipment. At any point, any form of expansion, then you will require funding, and debt is a source to be able to fund that, depending on the stage, on the growth stage where your business is at that point in time.
Okay. So debt financing is something that Access Bank is clearly a leader in the financial space here in Nigeria. So what would you say is the right time for any business to take on debt financing in their business?
Okay. So my response is still going to be aligned to what stage, what is the stage of your business. If your business is at the startup stage and you walk into any branch to ask for money, like Bumi said, we're going to laugh at you. Not that we're laughing at your idea, but then because we feel that you want us to be able to take a risk on your idea. The idea is yours, and you have to be able to demonstrate your sweat equity in that business. And at that point in time, anyway, debt is expensive. Debt is expensive to the extent that it can kill you, given that uncertainty is high at that stage of your business. However, as your business is growing, debt would definitely be able to help you provide the balance and the skill that you will require to be able to, just keep driving the growth of your business. And there are two reasons why you need to be able to seek debt. The first one is from an equity and control perspective, and the second one is from a cost perspective. So Bumi talked about the mentality in Africa where people want to be able to own everything, and really that mentality is real. So if you do not want to bring in people whose vision are not aligned to yours, then it's better for you to go out and seek for debt. And then the second reason why debt would also be better for your business is also from a cost perspective. For taking the equity as a source of capital, for instance, the more stake that you sell in your business, the less control that you have. But with borrowing, it's only the fixed amount of money that you have borrowed that you get to repay at some point in time. So take an example, for instance, if you were going to borrow the sum of, say, 100,000 from a bank, and they, just for the sake of conversation, the bank is charging you 10%. So because loans are paid back from your profits, if you make a profit of, say, 20,000 naira, and you're going to pay 10%, 10% of 100,000 is 10,000 naira. So you pay the bank 10,000 naira out of your 20,000 naira. However, if the stake that you have sold from your business is about, say, 25%, then you would have to only be able to keep only 75% of that amount of the profit that you have made. So there's less. So from this analogy, the amount of money that you part with for borrowing in comparison to how much you part with from selling your stake is much cheaper.
Okay, would you say that, one is better than the other? So would you say that, debt is better than equity, or would you say that, there are different stages in your business where, you know, they are necessary for you to have, this kind of source of capital?
So debt or equity is always relative, and it's always dependent at what point in time that you're asking for that debt in the life of your business. But I would also say what is interesting is that even when you approach a bank to ask for loan, equity is also one of the things that the bank will look out for to even be able to give you the funding, because equity in that business is your sweat. It's the extent of the confidence that you also have in that business. If there's no equity in that business, then the bank is also less comfortable giving you the funds. So at some point in time, that balance is always a necessity. Whether it's equity or debt, there's a mix that you must always have in your business at any point in time, because even banks will also look out for it. So I would not say one is better than the other. I would only say that you go out to seek for the type of funding that will be able to support your business, depending on the stage of your business.
Okay, all right, let's come back to Bumi very quickly. Bumi, so when we talk about equity, right? Now, what are the requirements? What are the typical requirements that equity investors would look out for before putting money in the business? Now, you mentioned earlier that, when it comes to equity, it is usually people that know you very well, family members, friends. But what if those people, they know you personally, but they don't know anything about the business, right? What are the kind of, information that a business person should be able to provide to them to enable them make informed decisions, before putting money in that business?
Yeah, thank you for that question. And really, the way I will answer that is, the requirement varies depending on how much, right? If you are trying to raise, 1 million naira in equity versus 100 million versus 1 billion, requirements are very, very different. So that's one. Secondly, the place you will go to raise 1 million naira versus 10 million naira versus 1 billion naira, it's also very different, right? Yeah. Because you would want to go to family and friends, like I said earlier, when you're in the idea seed stage, when you're in the startup stage, when you start to move from startup into growth stage, you might want to go to like angel investors, who are high net worth individuals. When you start getting closer to growth, right, from startup, and you've achieved what we call product market fit, meaning you're producing something, there's a buyer, and you've proven that month over month, you can create repeatable, revenue. So at that point, you might want to go to venture capital, right? You might want to go to venture capital. At the time you're at growth and you're trying to raise a lot of money, then you can go to private equity. So let's push that aside. Now, once we've dimensioned it that way, where and I think everybody should be able to say, I am at this stage of the business, because it helps to contextualize the conversation. So once that's clear, and then the second thing you achieve is, okay, how much do I need, right? So once you achieve those two things, then the third level is that, who do I go to, right? So once you've done that, you've then decided that, okay, what I'm really trying to raise is 10 million naira. And I've passed idea, I can actually go to angel investors, high net worth individuals within my community. The question then becomes, what are they going to ask for, right? Because it's going to be very different from the person who is trying to raise 100 million, naira. For example, the company we run, we essentially invest in companies, right? But typically, these are companies that need 100 million, 500 million, and up, right? Now, we will ask them a list that includes maybe about 50 different things, right? I need to see your financials, detailed financials that has been audited by somebody. I need to be able to see proof of your customers. I need to be able to see, how you come up with your products. I need to be able to see a full management team that's balanced, right? Not just a one-man business. So that's different. But once you now come back down to that, and let me focus on the person that's trying to raise, let's say 10 million naira, who is in the startup phase, right? That has not gotten into that sort of growth phase. Let's focus on that. And angel investors will not ask you for all the things that we will be asking for, right? So an angel investor will probably want to say, okay, let me see your sales. Let me see your financial report. And your financial report in this case doesn't necessarily have to be audited, right? Okay, let's say that you are trying to create a pharmacy, right? And this pharmacy is still operating at the basement of your house, and you've been selling for 6 months, and you have exclusive deals for some particular products, and you have 6 months of selling, I don't know, 2 million naira worth of goods every single month. So an angel investor will want to come and visit and check your inventory. They will want to maybe sit down one day and watch, things going. They will want to see your financial report, obviously. They will want to see that you have some team, maybe 2 or 3 people, because the day you're sick, they want to be sure that the business is still operating and generating revenue. Otherwise, their money is gone. So I think it's important to think about, to raise money, to raise equity. Just put yourself in the shoes of the other person, right? Because they have some trust, because they know you, and because they are an individual, they're not institutional, they're likely to be less rigorous on the things that they need. But my advice, and let me wrap up with this stuff, my advice is always, even though you are trying to raise 10 million, start thinking as if you're raising 100 million. Get your books in order, right? Get somebody to audit your report, no matter how little, right? Track everything and document everything. Create a team and have the bio and the profile of all of your team members. Understand your cost and your unit economics, and be able to tell that story to an angel investor, right? And I think those are some of the things, but there's no hard and fast rule. The key thing is just think about the future. Think about when you're trying to raise 100 million and start preparing as if you are there. Then automatically you will pass the checklist of a typical angel investor.
All right, thank you very much. So there's a lot of research that is necessary and a lot of planning as well, for any business owner who is looking to raise equity capital. Now, I mean, you invest in businesses, right? And as someone who invests in businesses, what are the risks that you typically look out for, that you try to mitigate before you give money to anybody? Now, I mean, business in general is risky. Doing business in Nigeria, it's another level of risk. So for you, what are the risks that you're constantly, looking out for, and how do you go about mitigating this risk? And what advice would you have to business owners who are tuned in on how they can also limit that risk so that opportunities are there for them?
Yes, thank you, Chibueze, for that question. Brilliant question. For me, here are the things that I look at. 5 things. Let's just top 5 things. And again, the backdrop is 70% or more of businesses in Nigeria will fail. So if you think about it that way, that 70%, probably more, right, will fail, then you really have to think hard before you invest in anything. And that's the perspective of an investor. And I think as a business owner, as an entrepreneur, if you think about it that way, you're more likely to be prepared. So what are the 5 things? I think my number 1 thing is the team. I think about the person, the integrity of the person, the passion. I think about their skills. I think about their character. Are they the kind of people that are very resilient? They will never give up. I think that's number 1. Number 2, I'll think about the market. So what are they selling? What are they producing? Is it sustainable? Is it unique in the market? Do they have a competitive advantage? Do they have something unique about them? Is the market ready? And so on and so forth. So I think the market is the number 2 thing that I think about when making an investment. But the number one is like, he's huge. That's like 60, think about that 60% of it, right? So I'll think about the market. I think the third one is in terms of the technical skills. How replaceable, how replicatable, how easy is it for somebody to copy this thing? Because we all know that it's a copycat, environment that we're in. Competition is hard. Just the way you're trying to create value and create, a business for yourself with a competitive advantage. In Nigeria, there's, I don't know, 50 million, they say there's 40 million SMEs or MSMEs. So there's 40 million other people who want to eat your lunch. So what's going to be unique about yours? So I think that is the third one. The fourth one I'll think about is really the unit economics. So when you think about your product or your service, how are you pricing it? Right? What's your price to the customer? And is the customer there that will actually buy it? Do you have enough customers to buy it? Then what's your cost to produce it? And at the end of the day, is it a case where your margin is only 10%, 20%? It's very, very slim. I like margins. I like 80%, 70%, 80% margin businesses, right? Because I have a lot of room. And sometimes to create 80%, 70% types of margin of business, it means that you have to innovate. You have to add more value in the value chain. You can't just, okay, let me just buy this and sell it. When I buy it, am I repackaging it, restructuring, making it a premium look? Think about the Apple phone, for example. What's the difference between an Apple phone and a Techno phone? They do the same thing. They make calls, but one has this feel and the margin those guys are making is ridiculous. Why? More input in the value chain, so the unit economics is also very, very, very good. Is that number 4? I think that was number 4.
That was 4, yeah.
That was 4. Let me see number 5. So unit economics. Maybe number 5 would be scale. I like scale. I like businesses that I can take, that at least in the future, it could be in 2 years or 5 years time, I can take it to Ghana, I can take it to, Rwanda, I can take it to Ethiopia, I can, businesses that have mass appeal, or let's even scale it down. Maybe I'm selling, maybe I'm producing something that I'm selling in Kano. I like the kind of business that I can take to River State, that I can, take to, Benue, and a business where I can even recruit somebody like a franchise who can be the one selling it there, and then we share the revenue together. So scale is something that I'm excited about. So those are the 5 things.
Okay, just before you go, I want to just chip this in. Now, that the government plays a huge role, in the longevity of any business. And when it comes to the government, there are so many policies that affect how SMEs conduct their businesses. How do you go about mitigating the role of government? Government is a risk factor. So how do you go about dealing with that?
Now you're putting me on the spot, Chibueze. That's the big elephant in the room. No, I like to go into businesses where I can stay away from government as far away as possible, right? So, looking at my value chain, right? Like, how can I reduce my dependence on business, right? So how can I, like, for example, if I'm doing a lot of import and export, right? So I might have to deal with, SON and NAFDAC and all of these different, organizations. If there's a possibility for me to manufacture locally, right? And make some of those things locally, I'd rather do that business. Of course, there's sometimes that it's impossible. And when it's impossible, maybe I'll set up my business so that the first year I'm importing from China, et cetera, et cetera. But in parallel, I'm working through a local value chain that I can use to replace that. Now, that would be very interesting for me. If somebody came to me and said, okay, the first year I'm very reliant on all the, government, processes and everything like that, So maybe that is just how I construct my business in general, to avoid that. Now, with that said, I know the government has a lot of interest in sort of this, like the presidential ease of doing business, Council, and I understand that NAFDAC is now fully automated. I haven't tested it myself. So as long as those things keep on coming, maybe it will help a lot. But knowing what we know today about the risks of doing business, I would say construct your business model in a way that you have, little as possible dependence on government processes. And definitely it will be hard for you to raise equity on a business that is fully dependent on government contracting, right? So you need something that's diverse. Again, I'm not saying a government contract is like zero and has no value, but in your portfolio, maybe let it be 20%, 30% of your portfolio, so you have diversification in there, so that you are able to raise, equity. And of course, once you raise equity, then people like Ayo will be there to actually look at you, and they won't laugh at you anymore.
All right, great. So to all our participants, the conversation is just getting really interesting. And I just want to remind you that, make sure that you start to put your questions down so that we can attend to them before the session is over. I've already started to see questions coming in from our participants. So that means, the conversation is going well. Now, over to you, Ayo. Now, debt capital is perceived as inaccessible and expensive to MSMEs. What would be your reaction to this?
Yeah, so that claim, it's one that is very, very popular. And it's not popular because there's lack of funds, because there are funds available. I mean, listening to Bumi talk about angel investors, venture capitalists and all of that, and even banks. I mean, yes, we laugh sometimes. And even banks, that tells you that there's an ocean of possibilities of, and different sources of how you'll be able to get funding. It's just the extent of your readiness. So typically when people say that funding from banks, especially for MSMEs, is inaccessible, it's from a collateral perspective. But beyond collateral, what are the things that we even look at? Because even if you have collateral, since I've always said that I've not been trained to be in the business of selling collateral. I've been trained to be in the business of being able to assess a business readiness to be able to take on funding and ensure that you pay me back. So there are three important things that we will look at. We will look at your credit worthiness, and that speaks to the integrity that Bumi also talked about. I mean, just listening to Bumi just tells me that when you are assessing someone who is seeking for funding, the thinking and the method of assessment or the criteria of what it is that you look at is not so different. It just depends on on who it is that you're talking to. So generally, even collateral sometimes can be seen as some equity in the business. So like I was saying, there are three important things: your credit worthiness, number one, your sales. You cannot take funding that you do not have sales that will be able to help you pay back. And so the sales, the extent of what it is that you sell, the process that comes in from your sales is what also determines your capacity. It also determines your cash flow. And then the third one is the equity, like I talked about. Equity, Bumi talked about having a team in place. Equity is also like you having your team in place. You're sweating it. Who are the people that are helping you to, to run this business? Sometimes, even where you have, because you have a large number of sole proprietors who run small businesses, sometimes just looking at maybe some loan reports, you notice that a particular client is late, maybe a day or two, and then you put a call across, you find out that the person is saying, oh, sorry, I have to travel to the village, or the account officer is saying that the customer had to travel, and that's the reason why there's a delay in payment. And then you begin to ask, okay, so if he traveled, did he lock down the shop? Are you saying that there's no body in the shop to sell? Why would he just want to travel, lock down his shop, and not want to sell? And then that begins to tell you that something is wrong. So you ask all of these questions. The form typically the bedrock of all of the kind of questions that we'll ask you, because we also want to be comfortable that at the end of the tenure of this loan, we're not going to have to resort to having to sell collateral. And in Access Bank, specifically. We've gone beyond just asking you for collateral. We have a lot of loan programs, loan products that will focus on these three things that I've talked about: your credit worthiness, which is your integrity, and the credit bureaus helps to really be able to make that easy. The sales that you're making, which determines how much money is coming into your account, into your business, and how much money will be available, what's going to be the extent of the free cash flow that will be available to pay back the loan. Because, for small business owners, they have just one pocket for everything. They have one pocket to fund their business. They have one pocket to be able to fund their household expenses. So you also want to be able to make sure that all of that is adjusted for, and whatever, maybe all the miscellaneous expenses. And so you are looking at the free cash flow that is available to that customer to be able to pay back the loan. And then, like I said earlier on, the equity. So if someone were to approach a bank to say, I want a loan, and then I ask you, okay, so for how long have you been doing this business? And you tell me 10 years. I would expect that if this is a business that is built to last, that this business is a going concern, and then I would expect that there will be some form of reinvestment into that business to be able to determine how much your equity is. If you've been in business for about 10 years, and you're making sales of, say, maybe 10 million naira per month, and then I look at your balance sheet, I look at the equity, and the equity in your business is not more than 500,000. That tells me something. It tells me you're doing something else. It tells me that even this money that you want to, this loan that you want to take, you're possibly going to use it for other purposes, or you want to divert. How can you be in business for 10 years and all that we see that you own in that business is not more than, say, 500,000? So where's your sweat in it? Where's the equity? Where's the equity that you're building in? Where's what is it? There's no confidence. We don't have the confidence that it's going to be a going concern. So beyond collateral, which is mostly touted as the reason why a lot of MSMEs do not get funding from banks, these are other things that we look at. So my point here is that even where you have the collateral available, we have clients who will call to say, oh, I have a property here, I just want you to give me 20 million naira. Then you say, oh, okay, what's this 20 million naira meant for? You say, why are you asking me? I've already given you my house. Don't ask me. But I'm not in the business of selling houses. I'm in the business of making sure that you use this money to grow your business. So if you're not telling me that you want what you need this money for, and it's not related to your business, then you're talking to the wrong organization. We don't want to give you money to go and get a second wife, if that is what it is that you have in mind and you want to come to the bank. No. So having the collateral itself is not in itself sufficient. Having collateral is one thing. I mean, the higher the loan amount that you're asking for, then we'll typically begin to look for a recourse. But generally for the MSMEs, having traditional collateral that bank requires is a challenge. And for us at Access Bank, we have really gone beyond focusing on collateral. We are looking at your business dynamics. We are looking at your business mechanics. We are looking at your stake in the business. We're looking at how money is coming in, how money is going out, and we're looking at you. Do you have integrity? Those are the things that are more important now for you to be able to assess one. If you have all of this, you'll be able to assess the loan. And from what Bumi has also said, you also be able to get funding from an angel investor if that's the stage of your business. So it just tells you that there are universal laws guiding how you'll be able to take funding, even from your friend. So if Chibeze, you're my friend, and I come to you to say, Chibeze, please, I need you to be able to give me 1 million naira. You're going to think about it before you give it to me. You're not going to ask me for collateral, but then depending on whatever your experience is or the precedent that I have with you, it's going to determine exactly the extent of which you're going to give to me. If you don't trust me and you just want to help me out, I've asked you for 1 million. You can just say, I'm sorry, all I have is 100,000, because you know that that's what you can afford to lose. So the laws governing how you can assess funds is the same thing. So the funds are available. You just have to be able to know at one point in time and who at any point in time that you need to be able to reach out to. And at the time that you're reaching out to get funding, what is it that you want to show that would give you credibility? That would give credibility. I mean, reflects the credibility that you have to be able to get that funding. I think that's what is most critical.
All right, thank you so much. That was really extensive. So now I'll move over to our participants. We have some questions from some of them. Now this one is targeted at Bumi. And the question says, for the 80% margin that you look at in potential businesses you invest in, are you referring to gross margin or profit before tax?
I'm referring to gross margin. Yeah, I'm referring to gross margin. Now, I mean, I won't say no to 80% profit before tax, you know, but you know, I have to say that that is not as common. I love those types of businesses. I mean, but yeah, gross margin. I think that would be okay. Yeah.
Okay. This question, please, when you're dropping your questions, please, to all our participants, just as a reminder, we would like to know who you are. So please try and put your name, your designation, and your organization as well. So don't forget, when you drop your question, you tell us your name, you tell us your designation, whether it's MD or CEO, and you tell us the name of your company. You know, we actually want to get to know our participants during this session. So the next question, I think, Bumi, this is also for you. It's not so clear. It says the concept of equity as explained is clear. Is it the same as venture capital?
Well, it's not. It's well, it's the same and it's not. You know, equity is just selling shares in your company, right, to some other people. The venture capital or the venture capital asset class is just one channel, right? Angel investment is another channel. Private equity is another channel. So those are all types of capital that you can get in when you're actually raising money.
Okay, next question, and still for you, Bumi. So I think equity seems to be the one that people are so excited about because most of the questions are actually about equity. So the next question says, how viable is a working capital for a business owner in the present economic situation of the country? What financial advice would you give going by the above?
Did you get that's another tough one. So you said how viable is working capital in this raising equity for working capital situation? I think that's the question, right?
Yes, how viable is working capital for a business owner in the present economic situation of the country? And what advice would you give to this person?
Well, I mean, I think first, take a step back and figure out, in the context of COVID-19 and the economic situation, are you in a growing industry or are you in a dying industry? That's number one. The earlier you make that call and sort of embrace that reality, the better. Step two is, depending on the answer to step one, make sure that you're in a growing industry, digital, right? Digital, remote, things that people use every single day, right? Like just fast moving consumer type, things, just things that no matter what, if there's a war, if there's famine, no matter what, people will still continue to use it. So once you've done that, check your unit economics. Can you make a lot of money? Can you make a lot of profit, right? Third, check your risks. Do you have supply chain risk? Do you have, where is the risk of your business? Once you're able to do all of that, my advice is this. I spoke about how when we invest, it's first about the people and the trust and the relationship. Build relationships. That's the foundation of everything, right? Build relationships. Now, once you build relationships, that will get you to those angel investors, right, that you're looking for, and build relationships in your sector, because most investors try to invest only in things that they know and they understand. For example, I only invest in technology, not even just technology, only software, because that's what I know. That's my area of expertise. So build relationships. Next advice, number 4, is build a board, like an advisory board. It doesn't have to be too formal. Have board meetings every month. Make yourself accountable to some other people. It will help you a lot, and you're starting to bring some structure to your business, no matter how small. Now, once they have seen you have board meetings for 12 months and they see that, this guy has integrity, or this lady has a vision, or this person is really, really hardworking, they're more likely to say, oh, you need that 10 million, here it is. Now, if your close community and people that know you are able to make that decision, then you're more likely to be able to get, venture capital and so on and so forth as you grow. But I think there's money to be made in this environment. The key is just make sure you're in a growing sector.
All right, thank you very much, Bumi. Now the next question is for Ayo, and this person says, if I have equity, good cash flow, and was able to analyze my fund usage, but I don't have collateral, are you going to give me the fund I need to grow my business?
Yes, Chibeze, yes, we'll be able to give it to you. But like I explained earlier on, what we have done, we have dimensioned our loan programs up to some certain thresholds that would ensure that businesses, as what you have described, will be able to get funding without collateral. Collateral is not the source of repayment. Our focus is more on the source of repayment. And if that is demonstrable, you have that track record. Why will you not be able to get funded? Now, I mean, if you're asking for a large loan size, then you probably can begin to look at creative ways to be able to support the business. So you have things like we have bill of sale, we have a debenture, you will have, we can look at the equipment that you have in that business and be able to use that as a source of collateral. Even sometimes, I mean, depending on how long you've been in business, like I said, the extent of your investment is also supposed to be give comfort of. I mean, equity, even collateral is like equity. So we will have to be able to look at that build up and then be able to tell you that, okay, up to this threshold, we are comfortable. Beyond this, we may not be able to support you at this point in time. But let's see how far what it is that we can give to you now can take you further, and then we continue to build on. Continue to. It's going to be like a building block. So those are the kind of clients that we are very excited to to work with. I also wanted to make a comment about the last question. I think someone was asking about with the present state of the economy and then how to be able to like get funding. And I like what Bumi said when he talked about what does, depending on what industry you are, whether you are in a resilient sector or in a non-resilient sector. The truth is, at this stage, post-COVID, it's almost too late for you to be determining in which sector you want to be, because nobody planned for COVID. It happened. So what is going to happen at this stage is, what are you doing to begin to look at how you remodel your business? What are you doing to begin to look at how you are building resilience into your business? And the equity that you probably would have built into your business, this is the time that you can call on to that equity to also be able to help you, to look at relationships that would also be able to help you. The winners of COVID were those businesses that had some form of online presence or some form of online orientation in the business model. So what we found that was interesting with a lot of our business owners, typically I've always said that MSMEs lack of digital skills, but then there was quite a lot of creativity. Someone was sharing with me that there's one lady that he buys bananas from, and there was one evening that he was strolling during the lockdown, and this lady called out to him to say, please, can I have your phone number? And he was wondering why. Said, because I want you to call you to come and supply banana to your house. And he said, oh, okay. He exchanged, he gave his phone number to the banana seller. The following day, someone was at his gate during the lockdown supplying him banana. He said he bought the banana, and that was how this woman during the COVID period was able to really be able to bring in more sales, because the sales, your cash, is the lifeline of your business. So you have to just begin to think differently. You have to begin to think about your business model, and then who knows if there's going to be another pandemic. So if this is a lesson that we have been learned, if there's anything that we have learned from this pandemic, from the impact of the lockdown, what are you doing at this point in time to be able to change that and then begin to build up your business again?
All right, thank you very much, Ayo. And I liked your last example of the banana seller. You know, a lot of times when SMEs think about digital strategy, they just think about maybe a website or this very elaborate, you know, thing that is unattainable. But just the way you just broke it down, that by getting somebody's phone number and putting a call to them, that is also a digital strategy. And people need to be kind of, you know, think about it in those very basic terms, you know, for them to be able to utilize it in their business. So thank you very much for that. One last question for you, Ayo. Somebody is asking, please, what kind of loan package do you have for startups? Can you take an SME to the stock market to raise money? What is the process?
Okay, see, Bumi is looking at me and saying, okay, I know I was going to laugh now. So I didn't disappoint you. So for startups, we have a proposition for startups, but this loan is not part of that proposition. Like, you know, for the reasons that I explained earlier on, it's a burden that is likely going to kill your business at that early stage. You want to be able to look for other sources of funding. So what it is that we're doing, you know, in Access Bank to be able to support startup businesses. Number one, so you have the idea, but then how are you, you know, building a framework around that idea that you have? You can have an idea, I mean, a very brilliant idea to be able to produce this cup, for instance. But beyond looking beyond that cup, it's how you're thinking of how you're going to be able to build your business. So we have programs, capacity building programs. We have our SMEZone. It's an online learning management platform that houses about 100 courses that our customers can interact with to be able to look at how they can begin to build their business competence. We have programs like the Building Entrepreneurship Today. It's a partnership we have with Enterprise Development Center. Our customers are made to go through a 6-month capacity building program to learn about finance, to learn about sales. Sales is very critical. Sales is the only thing that can keep you away from getting funding. So you have an idea, you're not yet selling, the bank cannot take a risk on that to be able to give you a loan. We also have partnerships and some courses that helps you to be investor ready. So some of the highlights that Bumi shared, a lot of them have to do with being investor ready. It's called investor readiness. So we also have a curriculum that our startup customers can interact with to be able to like help them to know all that they need to know. I mean, Bumi talked about unit economics, talked about the team that you're building. All of these are very critical for us to be able to even introduce it. We also have a team of investors that we can also introduce our customers to. For women specifically, there's a program that we're running right now, the Pitch-a-thon program for female entrepreneurs, where they also have opportunity to learn from best-in-class faculty to teach them about business competence. At the end of that program, the customers have the opportunity to be able to get a grant from the bank, as well as investors that we have also, put together that they would have. There will be a platform for them to pitch to those investors to be able to get funding. And part of the programs that we're exposed to is also how to be investor ready. So that's the proposition that we have around for startups. But like, I mean, we can't give you loan, not because we don't think that your idea makes sense or that your idea is going to scale, but because you do not have sales at that point in time to be able to show us that this idea is going to be that the market is ready for it at that point in time. So we have other initiatives that is going to help build your confidence, help you to be able to pitch to an investor, help you to be able to make sure that you're putting a framework together in milestones that would get you to the point where eventually you'll be able to get a loan from the bank.
All right, thank you so much. I mean, there are so many questions that are still coming in. I wish we could take every single one of them, but we promised that we would keep to time, and we just have 5 minutes to kind of wrap up this session. So now we'll be taking, final thoughts from our panelists. Bumi, would like to hear from you. After all that, has been said, what advice would you give to SMEs, business owners who are seeking to raise, either equity capital or debt capital? What final thoughts or advice do you have for them?
Yes, no, thank you very much, Chibuze, for that question. Wrapping thoughts for me. I'm a big believer in Nigeria. I'm a big believer in entrepreneurs as the core engine for economic growth. I moved back to Nigeria 10 years ago, and we started the business from scratch. I followed some of these things that we've talked about today. I went to my brother-in-law, and his friends. And, I created a small board. I reported to them every day, every month, even when there was nothing. That gave me the integrity. They gave me their first check. That was how I got my first equity. A bank would not touch me then. It took 3 years, maybe 4 years, before a bank would even kind of look at our business, right? And we've grown from there. We took accounting very seriously, from day one. Let somebody do your books. We thought about our team, right? Creating a team. Even some of the team members, once you trust in them, you give them some equity as well, so they have a stake in the game, right? So all these things, I think, are things that I have practiced and has worked. I believe that the opportunities are big. And of course, I'm in the technology space, so I believe in digital. As much as possible, create a resilient business that can survive whether you're there or not. That is also going to help you raise capital, right? So automate, if you're a retailer, put POSs, make that investment, put a POS machine, put a cash register, do proper accounting, right? From day one, it is going to help you. Last advice: separate your personal business from the company business. Make sure there's a Chinese wall. That discipline by itself will be one of the things that investors will see, and then they will come on board. Think about how your company will grow from idea, right, to startup to growth. It is step by step. It is the first 10 million, first 100 million, the next 1 billion, and so on and so forth, right? And as long as you keep doing the right thing and keep building relationships along the way, and you keep surrounding yourself with good people, and think about all we've talked about today. And of course, Access Bank is a great partner, and I think, as your numbers are growing, and you also create a relationship with your account officer, they're seeing your business, even when they're asking you for ridiculous requirements. Don't worry about it. You just keep building. You just keep building and keep showing. One day they will be the one. Like now, the banks are the one begging. So I'll call 5 banks, and they will be the one saying, "Hey, we want to fund you." So that story changes. The key is for you to focus on, other types of instruments like equity in the beginning before you kind of diversify and grow from there.
All right, thank you very much, Bumi. And lastly, Ayo, your final thoughts.
All right, thank you very much, Chibeke. So I would say that there's no better time for the business owners to go digital. I've talked about some of the imperative, and for us at this point in time, one of the things that we're trying to really do and drive to help our customers be able to build resilience is we're putting together a bouquet of digital offerings. We're entering into partnership that is going to help our customers learn how to manage a business, manage a storefront online. So if what you're familiar with is the brick and mortar and how you know how to run that the brick and mortar business model, now we're introducing you to a new world, online. And then how do you manage that your storefront online? And to be able to have a storefront online, we even have a website bouquet for as low as 15,000 naira, an introductory price for you to just be able to come on board and then begin to learn. We're also starting a payment acceptance service program for MSMEs to also be able to make payment acceptance from their customers to be very convenient on that on the digital platform. We're also getting into partnerships to be able to help our customers get discounted courier services. You will see that from this what I just talked about, these are practical solutions that are practical at this point in time, post-COVID. you want to get online, what are the nuances that are going to help you optimize your scope, payment acceptance, courier services, learning how to be able to like manage your business online. And of course, you need to be able to expand your capacity, the capacity of how to be able to manage your business. And in Access Bank, we have a lot of, I mean, this webinar is one of such. We didn't have to hold this in any building. We have a lot of webinars. We have one-on-one consulting programs to be able to help, listen to the clients, listen to some pain points, and then profile, solutions that is going to help the clients. And we're doing all of this online. I talked earlier on about our learning management platform. So many insightful courses that would help you even from the comfort of your home to just be able to learn how to begin to do things differently. There's a plan for us to be able to also go live with a digital marketplace that would expose our customers to over 30 million of Access Bank customers, because we believe that the lockdown impacted sales. And when there's no sales, no money is coming in. When there's no sales, it's difficult for you to be able to get a loan. So we're now getting into the frontier of helping our customers to really be able to drive up our sales. But for you to really be able to benefit from all of that, expand your sales beyond the proximity of where you run your business, you need to go digital. So my last one, go digital. Where your business matters to us enough for us to begin to think about that for you. So join us in Access Bank, ask your account officers questions around how you can become, how you can build resilience into your business by signing up to more of our digital offerings. Thank you, Chibueze.
Thank you so much. I'd just like to say a final thank you to both of our panelists, Ayo and Bumi. You guys were exceptional. And to all our attendants or participants for today's session, we hope you enjoyed this webinar as much as we enjoyed bringing it to you. Now, the link will be active for the next 90 days. So you can, of course, tune in and watch the session all over again by clicking on the link. You can also visit www.accesssmezone.com within the next 1 week for a rewatch of the session. My name once again is Chibueze, and it was a pleasure hosting this session. Thank you so much.